Okay, I hope you guys can see me. I attempted to center the video, but even if I'm off centered a little bit, I hope you guys will forgive me. So for those of you who do not know me, my name is Monique Wilson, and I have been in the investment sector for about 12 years as an investment advisor. I'm passionate about my job. I used to tell my husband back in the day that my job is as important as his. He's a medical doctor, because I take financial health to be as important as physical health. Understand as well that the lack of financial health can also have an impact on us physically. Now, Jamaica in particular is in an investment climate. Those of you living abroad might have heard about the fact that Jamaican flag was put on Wall Street last year in recognition of the fact that we were the best stock exchange in the world. But the truth is, we have been the best stock exchange in the world for the last 8 years. But even prior to the whole stock market becoming popular, we were also big on repos. I mean, that had its negative consequences economically, but we were big on bonds and we were big on unit trusts. The Sigma funds, which is issued by Sagicor Investments, is actually the oldest unit trust fund in the entire English-speaking Caribbean. So we have been investing and been concerned with investment for a very long time. Now, what the stock exchange or the popularizing of the stock exchange has done for us in recent times is allow the average person on the road to be able to feel as if they can be a part of the exchange, that they can buy into the exchange. Now, I am passionate about all my clients, from my wealthy clients, my corporate clients, to my clients who are just trying to build a portfolio. But this particular video is for the guys who are newly employed, low income earners, or individuals who are working class people, and you want to build some form of investment portfolio. Perhaps you want to buy land in another 5 years. Perhaps you want to go back and do a master's degree or a bachelor's degree. Probably you have kids who you are raising with ambition, and you know that you will need money to fuel those ambitions. So this is for those individuals, persons who often believe that they are not in a position to save. Now, I'm going to be looking down from time to time because I have some notes on my clipboard. I have a scenario of 3 individuals. The first person I call person A. Now, person A, January 2018, decided that they're going to save $1,000 the month of January. And they challenged themselves or herself, let's just say person A is a girl, she challenged herself to increase the amount she saved every month by $1,000. That means that she would have saved $1,000 January, $2,000 February, $3,000 in March, and $4,000 in April. Now, if this individual had done this from the first month in 2018, then at the end of the 12-month period, December 31st, 2018, they would have had in total $78,000. And we're just doing simple math, so we're not talking about whether or not the money would have gone into a unit trust, which would have borne interest. There are unit trust funds who perform at 30 or 40% in 2018, but we're just looking on simple maths, right? This individual had just saved $1,000 and increased that amount every month by another $1,000. They would have had at the end of 2018 $78,000. Person A has a little bit better income, and so they decided that January 1st they are going to save $10,000, and February 2nd, on the end of February 2018, they saved $12,500. They increased the amount by $2,500 every month. At the end of 2018, that individual would have $355,000. Now let us go up to someone who's probably earning a little bit more. Let us say a lawyer who's a little bit more established, a young doctor perhaps. You know, you're now doing your residency, so you don't necessarily have all of the bills, and you find that you're in a position to put aside a little bit more. You might decide that you want to start with $50,000. So let us say in 2018 you started with $50,000, and you challenge yourself to up that amount every month by $5,000, $50, $55, $60, $65, $70. At the end of 2018, that individual would have had $930,000. So just to recap, person A saving $1,000 a month and upping it by $1,000 each month would have $78,000. Person B saving $10,000 per month and upping that amount by $2,500 monthly would have $355,000 at the end of the year. And person C, starting with $50,000 and upping by $5,000 every month, would end up with $930,000. Now let us look on the performance of 4 of the several stocks, and these stocks were really chosen at random, but 4 stocks that performed reasonably well, significantly well in 2019. Signos. Now, if you had Signos, the Jamaican dollar stock, January 2nd, 2019, and all of these statistics will be between January 2nd, 2019 and January 2nd of this month, the price would have moved from $10.97 to $25.75. That represents an increase of 134.73% over a 1-year period. Proven investment moved from 26.47% to 46.45%. That's an increase of 75.48% over 1 year. Wisynco moved from $10.56 to $23.39. That's an increase of $121.49%. Then Victoria Mutual moved from $3.82 to $8.99. That represents an increase of 135.34%. Now, if I should average the performance of these 4 stocks over that 1-year period between January 2nd last year and January 2nd, 2020, it would work out to 116.76%. So this what I'm saying is that if each individual had invested 25% in each, right, the average growth of this portfolio would be 116.76%. Now, what does that mean? It means that at the end of 2018, person A would have accumulated through disciplined saving $78,000. They would have come into Monique and they would have said, Monique, I want to invest this money. I want to continue to do my monthly saving because I've now, inculcated a disciplined approach to saving, but I want to do something with this lump sum. So they'd have come to Monique and they'd have said, okay, let me invest $78,000. Now, if person A had invested $78,000 in this portfolio, they would have seen a growth of $91,072.80. $91,072.80. That means at the end of 2019, and this is, void of all the other savings that they would have done, just the increase on what they saved 2018, they would have had a total of $169,072.80. Just to round it off, they would have moved from $78,000 to $169,000 just based on the growth of the stock portfolio. Person A would have come in with a $355,000. Invested the same way, they would have earned over $414,000. That means that the January 2nd, 2020, they would have moved from an accumulated amount of $355,000 to $769,000. Person C would have saved $930,000. They would have gained $1,085,000, a little bit over on this portfolio, which means that January 2nd, they would have had $2,015,000 roughly. So the point of the matter is not for you to focus on the $2,015,000 or the $769,000. It's for us to hone in on what we have been taught by our parents, certain little folklores that we have in Jamaica, one cocoa full basket, every mickle make a muckle, and approach investing and approach savings in a systematic way, and not believe that you do not have an income where you can't sacrifice. And that is hard to say, or you can't, that regardless of your income or your ability to sacrifice. Let me say you can't sacrifice, because growing up, I think my parents, it was difficult for them to sacrifice. But let us say you are in a position to sacrifice. If it's even 1,000, you could take the person A approach and do 1,000. Try to do 2,000 February, try to do 3,000. It means that at the end of that period, you would have had, today you would have had over $170,000 in your portfolio. Now, many individuals who fall within the minimum wage bracket, I'm sure if they check their accounts today, they don't have $170,000 in savings. Many persons who are more probably above minimum wage. Let us say you're entry level in some companies. Several of you, if you check your account balance, you don't have $770,000 in your account. But if you had done 10,000 and increased that by 2.5 every single month, today you would have had over $770,000 in your account. Now, for the young doctors, a lot of times, or the young lawyers, or the professors, or those persons who are higher earners but still have tremendous room for growth. If you had taken person C's approach, you would have today had over 2 million in your account. Several of these persons who I am speaking to now don't have 2 million in their account. So my point is, go in and speak to an advisor. My name is Monique Wilson. I hope you guys will inbox me. I like to tailor plans according to each individual's needs. But regardless of your income, there is a plan that suits you. Happy saving.